Hello fellow option traders, this is Jeff and welcome to the weekly wrap-up for the week ending April 8th, 2016. Well, as far as announcements were concerned, there wasn't a whole heck of a lot that came out this week. And a lot of it was, the kind of news that doesn't excite anybody in either direction. The Federal Open Market Committee met on Wednesday and basically said, well, we might raise rates and we might not. We're not in any big hurry. And I think, for the most part, the market just said, I know you guys don't know what you're talking about. So Thursday was not a good day for the market. Today was just kind of flat, and it's really been bumping up against a ceiling here, and we'll take a look at it in a minute, that it just doesn't seem to be able to get past at this time, which is fine with me. We're just looking at one account here, and right now we have the Russell trade in here, and we did roll it. So we will go into some more detail on that in a moment. But for today, we're looking at, let's bring it charts up here, and we'll look at, I'm not sure that I can get a chart on this or not. Let's see, no, it doesn't like that. So we'll look at YM at the futures for the Dow. So, yes, we had a nice little high up here. And for the year, let me zoom out, we actually moved above the open for the year, or moved above the close of last year slightly. We can bring that up a little bit closer here. So here we are at the close of last year and the open of this year. And it did move above it, but now it looks like as though it's coming back down. We have the 20-month average here. It's playing around with that right now, trying to decide which way it wants to go. And you know which direction I'm hoping that it goes. I'm hoping it goes down. So SPX, pretty much the same thing. It did move above its 20-month moving average here, and it looks like it's acting as support at this time. And it did that previously also at the end of last year. So we'll just have to see how that plays out. It's not a predictor or anything, it's just a point of observation. Really what we look at is momentum, and momentum is heading down. Do we have the same thing with the Dow? We can't, because we look at the futures, we don't get really exactly what's happening during the day on the Dow, but we do get something to take a look at. Momentum also is coming out of the market. The NASDAQ, pretty much the same thing. Momentum coming out. If we looked at the weekly chart at the MACD, momentum was pretty high, up around 100. And that's pretty solid, but I think it's 5 times greater than what we're seeing here. So this 100 is kind of deceiving if we compare it to the daily. So, but on the daily, definitely we're losing some momentum here. And of course, our favorite is the Russell 2000. Blinding electronic speed, and actually the Russell is a little bit volatile here. Not the diminishing downward movement that we were seeing on the other indexes, but rather there is negative momentum, and it's trying to come up, and it keeps failing, and it keeps moving back down. The VIX is currently at 15.49, slightly elevated from what it was during the big run last year and the year before, when it was hanging around 10, 11, 12. you know, somewhere around there. Oh, I got that once before. I don't know what's going on here, but it also is below its 20-month moving average and bumping up against that as a possible point of resistance. Whether it breaks out of there or not, I don't know, but we're seeing some momentum come back into it. So that's interesting, but which direction? Well, it's positive momentum. And gold is at 1243. Let me zoom out here. Yeah, gold is at 1243. It was showing up pretty good first part of this year, nice big move up, and now it's also running out of gas, but we'll see what happens. We're just keeping an eye on it. Oil made some big moves in the last couple of days, back up. So I hope you filled up your tank, but I know a lot of you have to fill up your tanks pretty frequently. So I guess it doesn't matter. It all averages out. The dollar is at 94, 225 and $1.14 in some partial pennies against the euro. Little bit of weakness. We can see here that overall the trend is pretty much down on the dollar, especially very apparent on the monthly, but not out of line with previous values. Not a big follower of the dollar, so you know, I guess I really should stick with what I sort of know, and that's the indexes, in particular the Russell. So let's go back and take a look at that a little bit more. I have drawn a channel over here on the weekly showing the downward trend, and this resistance in the channel up here is playing very strongly, maybe a third test of it, and if it moves back down, then we're probably looking to go below our low for the year, which is down here around 966 or so. Okay, over here on the daily, pretty much the same picture, similar trend line here. Back out and take a look at it. It's a similar trend line, pretty much the same as this trend line. Only doesn't look exactly the same, but it really is still hitting the same highs. And if we were to take a look at this on a monthly basis, and this is what I kind of like to keep an eye on here, is this 20-month moving average. It's above it right now. So let's see what happens. This is supposed to be oh, we're on a monthly. This is supposed to be a 20-month. I don't know how they got screwed up. There we go. That's a little bit better. We saw it move down below here, which was a danger, a signal for us that overall we might be just heading down for some sort of correction. It's really taking its time, and the reason why it's taking its time is because the Federal Reserve is propping up the economy by printing money and some of the other policies that they are using, which really don't do anything to make the economy better. They just make it look like it's better. And okay, so last week I did mention that I was thinking of rolling the April Russell to the May expiration. Let's go take a look here at the account statement. Now the way that you can get this, what I'm doing here is I've gone in and I said I want it from the first of the year to pretty much the current date. We can make it the 8th if we want to. And for this symbol RUT, and it's just the trade history. So here's our total trade history for the Russell for this year. And here is the roll right in here. So what I did was I bought back this April position here by selling my 1120 long call and buying back my 1100 short call. we'll take a look at these numbers in a little bit more detail, and then rolling that into a May 1100, 1120 credit spread for a total of $1.45 credit. But I'm still, you know, that looks good, but actually still not out of danger here. So we haven't recovered our loss. We'll take a look at how that works out in a moment. So we can just let's just take this statement here and let's go from March 1st. How's that? And we got a little bit more room here. There, so this is what we're interested in here anyway. And then I made it into an iron condor by selling a 970, 950 bull put spread. So it ends up on a chart looking like this. This is where we need to be for this period of time. Remember how I showed you how to do that? You can, I showed you this last week, right? You're okay with that? Anybody has any questions on it, I'll do it again next week. But for right now, how you can draw this box in here to just show you where you need to be is a pretty easy thing to do once you know how to do it. Okay, so that's where we're at. Now, I said we're not out of the kitchen yet. We are still down on the Russell for the year, $418.50. So you say, well, how can that be? You rolled it, you got a credit here, and you got another credit here. How can that possibly be? Well, let's look at the numbers. Let me bump this over. I'm going to slide this little puppy over to here and bring up my spreadsheet. All right, so when I bought back the April 1100, 1120, it cost me $8.90, or 890 cents. $890, I'm sorry. 890 cents. Yeah, that's what that is right there, 890 cents. And I sold the May for $10.35 credit. So my net was $1.45, just like it shows up here, $1.45. And then I sold this May 970, 950 for 90 cents. So my total credit overall was $2.35 minus transaction costs. Okay, so reason why I'm still not out of the water yet is because I still have to pay for this somehow or another. Now, when I opened this, I collected $1 something. So when I rolled it, I still had this. All I did was finance my roll. I financed closing this particular trade by opening the May. So in reality, let's take a look here. Let me spread this out a little bit more. I go to my 2016 trades. I collected $1.20 on this. I turned around. Let's see here. I need to get over here. I collected $1.20 and I sold it, or I paid $8.90 to get it back. So that's what, $7.70. Still in the hole, but I collected $10.35 on this, so we're like $300. I'm just kind of rounding this stuff off. If I put in here, all right, so this was $1.20, right? And if I say, let's see here, this plus this, oops, this. So it's still down 770, but I collected 1035. So if I collected 1035 on that one, Well, this isn't working out now that I think about it. I probably shouldn't have done this live on air. Suffice to say, though, in my mind, logically speaking, we have some ground to make up here with this 438. We're still down for the year. Now we do have profits for the year, but still. And here it's telling us that we're actually up 72.50, and I was thinking, well, maybe I should close this. And then I go over and look here. Year to date on the Russell, we're down 436. So let's jump over to the Analyze tab and take a look. Here we're looking at a total of 1125 maximum profit. Looking at, let me see, I gotta get this thing, there we go. 1125, well actually we're at 1180 here. If I take these and add them all together, because that's what I did, was I took the 1035 and the $1.45, and I should have added this one too. Let's add that one too. So that's 1270 minus transaction costs. That still doesn't come out exactly right either. Anyway, that's what I had there, 1180 minus transaction costs. That's getting a little bit closer. The numbers aren't coming out exactly right, but they're pretty close. So I was thinking, well, maybe I should cash this in. Well, no, I probably should not cash this in, even though it's up 77.58, because I still have to pay for that roll. So what I'm going to have to do here is wait this thing out and see how close I can get to this max profit. I need to make another $400 on this. So we're talking, here we'd be up 500. So if we get halfway up here, then we're actually making money. Of course, you know, price has got to stay down here, and I believe it is. I mean, all the indications for me on the charts are that there's a darn good probability that the Russell is going to make a move down over the coming weeks. And that's all I need. And, you know, when IV starts to increase as it moves down, it's going to push down the purple line here, or the magenta line. But that's okay. I'm just going to wait it out. This is one standard deviation to the downside, which is at 1021. Very far away from my 970 here short. So got plenty of room to the downside here. If the market should play out the way that I think it's going to play out over the next 6 weeks or so. And then I had a question as to why I would want to roll this as soon as possible. Well, for me, the ideal thing to do is to do these credit spreads from 6 to 8 weeks into the future. And if I would have waited, you know, like past last Wednesday, then we would start getting below the 6-week window, and I didn't want to do that. So now we're looking at 41 days to expiration here to May, and I'm patient. I'll wait for it. I'm not real worried if we go back in the money. That's okay with me. RUT right now is at 1094. 1100 is in the money, so we're 5 away from that right now. I'm not real worried about it. I'm pretty sure that we're going to, this resistance line here is going to play out, and it's going to at least stay below the 20-month moving average, which is going to start bending down here in a couple of days if we don't get any sort of big movement upward. So kind of that's where I'm at on this particular trade. I'm not going to really go over any of the other trades, but it's always fun to come over here and take a look at your profits and losses for the year and see how things are going. The USO trade was a good one, And the IWM made a little bit on that. I think that was a calendar trade that managed to make a couple of pennies on. So anyway, that's it for this week. Stay tuned. I'll be back next week. Thank you very much for watching. Have a great day and happy trading.